Good morning. As the sun rises over Europe's major financial centres, investors are waking up to a market landscape that's anything but straightforward. European stock markets are off to a mixed and uncertain start this Thursday, January 15, 2026, with early trading reflecting a blend of caution and curiosity. Germany's DAX and the UK's FTSE 100 have both dipped slightly, reflecting investor caution. The mood in Frankfurt and London is noticeably tense as traders weigh the risks and rewards of the day ahead. In contrast, France's CAC 40 is up by 0.1%, hinting at some local optimism. Paris seems to be bucking the trend, with investors there encouraged by recent positive developments in the French economy. These small moves show a wait-and-see mood as traders digest a swirl of global events. Many are holding back, waiting for clearer signals before making big decisions. The divergence is driven by a mix of geopolitical tensions, fresh economic data, and company results. Headlines from around the world are adding to the uncertainty, making it difficult for investors to find a clear direction. Key concerns include a diplomatic standoff over Greenland, which has raised questions about future trade and resource agreements between Europe and the Arctic region. At the same time, easing tensions in the Middle East are providing a measure of relief, with hopes that stability in the region could support global energy markets and reduce volatility. Investors are also watching new UK economic numbers closely, as fresh data on inflation and employment could influence the Bank of England's next moves. Major European company performances are under the microscope as well, with quarterly earnings reports expected to set the tone for several sectors, from banking to technology. This patchwork of influences is creating today's choppy, unpredictable market landscape. Sudden swings in prices and sentiment are keeping traders on their toes as they try to navigate the uncertainty. It's a reminder that Europe's markets are being pulled in different directions by both local and global forces, making it more important than ever for investors to stay informed and adaptable. In the coming minutes, we'll break down the main stories shaping this complex picture and explore what they could mean for the days ahead. One of today's most significant and closely watched stories is the escalating diplomatic standoff over Greenland, a vast and icy landmass that has suddenly become the center of global attention. The United States has shown a renewed and very public interest in the island, sparking a series of tense and sometimes awkward talks with both Denmark, which formally governs Greenland, and Greenlandic leaders who are seeking more autonomy. President Trump has tried to project optimism about the possibility of a deal, but Denmark's Foreign Minister Lars Løkke Rasmussen quickly and firmly dismissed any notion of an agreement, calling the idea absurd and reaffirming Denmark's commitment to Greenland's sovereignty. At the heart of the disagreement are America's strategic and economic ambitions in the Arctic, including military positioning, access to natural resources like rare earth minerals, and new shipping routes opening as the ice melts. This rift is much more than a simple bilateral issue. It's sending shockwaves through Europe and NATO, raising questions about unity and the future of cooperation in the region. The open dispute between long-standing allies is raising serious concerns about the strength and reliability of transatlantic relationships, especially at a time when global alliances are already under strain. European leaders are now weighing their own responses to this unexpected diplomatic chill, debating whether to support Denmark more forcefully or seek a mediating role to ease tensions. The uncertainty is unsettling for global markets, which are notoriously averse to unpredictable geopolitical risks, and investors are watching every development with growing anxiety. The situation in Greenland is far from resolved, and with so many interests at stake, from local communities to international corporations, it will remain a key focus for investors and policymakers alike. As the world watches, we'll be monitoring closely for any signs of escalation, compromise, or a new chapter in this unfolding diplomatic drama. Europe isn't standing by in the face of mounting tensions. As Denmark faces intense pressure from the United States over Greenland, European leaders are making it clear that they will not let one of their own stand alone. The stakes are high, and the continent is rallying in a rare display of unity. France has called an emergency defense meeting, signaling strong support for Denmark and underscoring the seriousness with which Europe views the situation. French troops are now heading to Greenland for joint military exercises with Danish forces, a clear and deliberate message of European unity and resolve in the Arctic. Germany, Norway and Sweden are also sending their own contingents, transforming what could have been a regional dispute into a coordinated show of strength by multiple European nations. This isn't just about Denmark anymore. It's a powerful statement that Europe stands ready to defend the sovereignty of its members, no matter the external pressure. The military build-up in the Arctic adds a new layer of complexity to the standoff, raising the stakes for all sides and making the situation more unpredictable. For Denmark, this surge of support is vital. It not only bolsters its negotiating position, but also reassures its citizens that they are not isolated in this crisis. For global markets, however, the military build-up injects fresh uncertainty and risk, as investors weigh the possibility of escalation and its impact on trade and stability. Investors and analysts are now watching closely for the US response. Will Washington choose to escalate the confrontation, or will it seek a diplomatic off-ramp to ease tensions? The next moves from Washington could determine whether tensions continue to rise or if there's a chance for cooler heads to prevail and for dialogue to resume. Europe's united front is a powerful signal of solidarity, but it also risks deepening the rift with the US, potentially reshaping alliances and the balance of power. As the world watches, the next chapter in this unfolding drama will reveal whether confrontation or cooperation will define the future of the Arctic and Europe's place on the global stage. Amid Arctic tensions, there's relief from the Middle East. Protests in Iran had raised fears of wider conflict and oil supply disruptions. President Trump's latest comments suggest the crackdown is easing, and mass executions are off the table. This signals a de-escalation, lowering the risk of US intervention. Markets have responded positively as the threat of a major conflict recedes. The news has helped offset some of the anxiety from Europe's diplomatic standoff. It's a reminder that global markets constantly balance risks from different regions. For now, the Middle East is offering a rare moment of calm. The easing of Middle East tensions has had an immediate impact on oil prices. After a 5-day surge, Brent crude fell nearly 3% to $64.57 a barrel, and WTI dropped to $60.26. The sharp decline reflects fading fears of supply disruption from Iran. Lower oil prices are good news for consumers and businesses, easing inflation pressures. The market's quick reaction shows just how sensitive oil is to geopolitical headlines. While today's drop is welcome, the market remains on edge for any renewed trouble. For now, cheaper oil is providing a boost to the global economy. But any new flare-up in the region could quickly reverse these gains. The oil market will stay volatile as traders watch for the next twist. Today, at least, the mood is one of relief. Back in the UK, there's a rare dose of good economic news. The economy grew by 0.3% in November, triple what experts predicted. This surprise beat has caught the attention of traders and analysts. It challenges the Bank of England's gloomy outlook and hints at more resilience than expected. The data helps offset the FTSE's dip and boosts confidence heading into 2026. One strong month doesn't make a trend, but it's a reason for cautious optimism. The UK economy is showing stubborn strength despite global headwinds. For now, it's a welcome bright spot. Company results are also shaping today's market mood. Swiss luxury giant Richemont reported strong sales, especially in the Americas, Japan, and the Middle East. Their diverse growth shows wealthy consumers are still spending on high-end goods. Meanwhile, UK asset manager Schroders expects annual results ahead of forecasts. Rising income and flat costs are driving profitability, impressing investors. Both companies are bright spots, showing that well-run firms can thrive even in uncertain times. Richemont's global reach and Schroders' disciplined management are paying off. These results are lifting spirits in their respective markets. Strong company performance can help steady nerves amid geopolitical turmoil. It's a reminder that individual success stories still matter. Closer to home, UK consumer and housing sectors are sending mixed signals. Pub operator Mitchells & Butlers posted robust sales growth, showing people are still spending on social experiences. The hospitality sector is off to a strong start this year. In contrast, homebuilder Taylor Wimpey warned of margin pressure and a weaker order book for 2026. Softer pricing and fewer pre-sold homes suggest the housing market is cooling. The split highlights resilience in some consumer sectors, but challenges for big-ticket items like housing. It's a reminder that not all parts of the economy move in sync. Investors are watching for signs of broader trends. So, what's next? Markets are balancing good news from Iran and the UK against Arctic tensions. The key question: how will the US respond to Europe's united front over Greenland? Any sign of de-escalation would calm markets. Escalation could spark fresh volatility. Later today, attention shifts to Wall Street, with earnings from Goldman Sachs, Morgan Stanley, and BlackRock. These results will offer a crucial read on global financial health and investor sentiment. Strong numbers could reinforce cautious optimism. Weak results may deepen uncertainty. The next 24 hours will be pivotal for market direction. As always, traders will be watching every headline for clues. It's shaping up to be a fascinating end to the day.